Hi, good evening, everyone. So welcome to the webinar today. Okay, I just want to make sure everything is in order. Hi, good evening, everyone. So welcome to... Okay, great. I think I can start. Okay, so good evening, everyone. So welcome to the webinar today. And of course, I'm so glad to be able to participate in SGX Trading Festival. My segment is actually, of course, sponsored by SGX and Tiger Brokers. So thank you so much for inviting me here to actually share a view on what my views of the recent investment environment. Okay, the topic for today's session is a reopening of China's economy. How should we position ourselves to capture the opportunities? Okay, so let me just clear some admin slide. So my name is Emin, CFA chartered holder. I'm an MD and founder of this company called Invest Coach Private Limited. I'm a region investment speaker. My area of specialty includes stocks, financial planning, and real estate. And again, of course, I need to share with you a disclaimer. So please take note, I'm here on education purpose only. So make money, be happy, lose money, don't scold me. Okay, now I'm only got 1 hour, so I'm actually going to spend most of the time on the content. Okay, let's jump straight into it. So this is the agenda for today. Topic is China. So first question, why China? Why focus on China? So I'm actually going to spend a little bit time on that. You know, why China should at least be one of your focus, if not the main focus of your investment team for this year. I'll talk about this. Then, of course, we'll look at what are some of the instruments you can use through SGX, whereby you can participate in the China growth story. So, of course, we actually talk about three main ones. The China Team ETF, Exchange Traded Funds. We'll actually talk about that very soon. We'll talk about the REITs with China exposure. Of course, you all know SGX is actually very strong in REITs. And of course, we have quite a bit of companies, SGX listed companies with business in China or with Chinese exposure. So these are the ways you can participate in this China growth story. Now, why China? Why China? So let me just bring you back a little bit to the beginning of the year. So this is an article that was shared in early this year. So Singapore economy's growth slowed to 3.8% in 2022. Outlook darkens for 2023. Okay, so I'm quite sure if you were to actually flip the papers at the earlier the year, it's actually quite gloomy. I still even remember our PM actually came to the news and said that, hey, you know, this year is going to be a bit tough. Let's, you know, bite our teeth and, you know, throttle through. And yes, not only in Singapore, if you actually look at global news, like as per this one, economies in Wall Street Journal surveys still see recession this year despite easing inflation. Even though these two articles, they are at the beginning of the year, so I think the risk is still there. Okay, economy is actually still quite gloomy. And of course, you know, one of the results is as per what happened 2 weeks ago. I'm quite sure if you have you all have heard about the banks in US, they actually get into trouble. So even Credit Suisse get into trouble. So these are some of the results of the interest rate and inflation. So of course, all this, there's some interrelated effect. And I do see, you know, such bad news to continue. Okay, I don't think that we are already at the bottom. So likely that, you know, more and more we actually see certain bad news coming up as the year trotted along. So I just want to help you visualize. So how does all this news translate to in terms of chart movement, in terms of the stock market movement? So this is what you see on the PowerPoint slide is the STI, Straits Time Index, STI over the past 1 year. So you can see that is generally on the sideways trend. If you can see that, it's actually generally on a sideways trend. It started off probably about 3,000, less than 3,002, end off about 3,266. So this is STI in 2022. If I were to give a prediction for 2023, so of course, this is my personal prediction, it's just an opinion. I believe that the market will actually be on a general downward trend with high volatility. So it's just a prediction. I may be wrong, but I just want to help you translate, what does all this bad news or negative economic news means in terms of the chart form. And this is my best guess. I think that is how the market is actually going to go. Like, yes, I may be wrong, but end of the day, what is important here is this, how does this help you to prepare your investment strategy? Okay, so it doesn't matter I'm right or wrong, it doesn't matter. So why I'm doing this is actually to sort of help me prepare. So let's say I have this scenario in mind, then what can I do? So that is the purpose of this slide. And as I mentioned, I do believe it's a general downtrend. So at the back of my mind, when I actually design my investment strategy for 2023, so this is the backdrop that I actually have. Now, so given that, the market is sluggish, it's starting to be volatile, it's going downwards. So it's very easy to say that, might as well don't invest. Correct, Then if you have this mindset, then frankly, there's no best time to invest. No. I mean, ask yourself truthfully, is there a point in time whereby you confirm make money, one sure you can ignore, right? So all the time in the market, there's always good news, bad news. It's always about, more good news, less bad news, or less good news, more bad news. Okay, so I don't think it's right to actually say that, hey, then forget it, don't invest. But what we will do is that at this point in time, is there any bright spot? Is there any areas that, yes, I know the general market is down. Is there any areas that we can actually focus a little bit on? And of course, I believe China is one of the bright spot we can look at. Of course, that is not the only bright spot. Okay. So there can be a few bright spots, but if you ask me, China is definitely one of the investing bright spots that we can focus on. As per what this slide suggests, as China reopens and data surprises, economies are starting to get less gloomy. So this was earlier this year. And more recently in March, so you can see that China sets GDP target of around 5%, which is quite close to the pre-COVID level. Okay, that means they're actually expecting China to actually bounce back, to go back to the pre-COVID level. Okay, great. I see a lot of questions coming in. Okay, good. Hopefully I can spend some time at the end of the session to actually take the questions. So do keep them coming in. So really, thank you so much. And I'll try to answer them at the end of session. I really appreciate that. Okay, great. So China, hopefully this is my 10 minutes of why we actually look at China. So again, of course, I'm not saying that is the only bright spot. Okay, I do believe there are other bright spots, but China, if you ask me, is the one of the most prominent one at this point in time. Now, so let's say if you were to agree with me, okay, China is the thing to look at. So how can we participate in the China, whether you call it rebound or the growth story, using SGX instrument? So in fact, even though SGX is Singapore-based, you can actually get very good exposure with some of the instruments that is available in SGX, and of course via the Tiger platform. So one of them is ETFs. ETF is exchange traded funds. Okay, maybe the audience can do me this favor. If you're familiar with ETFs, don't mind just help me type a 1 onto the chat so that, I roughly know that I can go a bit faster. If ETF is something very new to you, don't mind just help me type a 0 on the chat. Okay. So it would be great if you can give me some response. I have a sense of, what is your investment experience? If let's say, for example, is something that you're familiar with, don't mind just send me type of 1. If you are this is totally new to you, please send me type of 0. Okay, thank you, Tiger Boy. Thank you, Will Bay. Okay, I see some 1s, I see some 0s. Linda, thank you. Great. Okay, thank you so much. Okay, so I think most of you have already some experience. Good. Then I can afford to go a little bit faster and I save more time for some of the questions you have at the end of the session. Okay, great. Appreciate your response. Okay, just for the benefit of those who are new to ETF, I think I saw 1 or 2 zeros. So what are ETFs? Basically, they are investment funds. Okay, they are funds. So think of it this way. Basically, you have like a fund company. They actually raise funds from investors like yourself. Okay, take the money. Then after that, they will actually go and invest in a basket of instrument. Okay, so a basket of stocks, can be a basket of stocks, basket of bonds, or basket of instruments. And most of, so of course, there's actually this thing called a unit trust. Some of you may be familiar with. So let's say, for example, if you walk into the bank, then after that, this bank officer say, hey, you got so much money sitting in a fixed deposit. Why don't you actually invest in my unit trust? So same thing. So those are also funds. So the structure is actually quite similar. ETFs and the funds you actually find from the banks is also quite similar. Okay, the main difference between ETFs and the funds from the banks is where are they being distributed. So of course, ETF, exchange traded funds, as the name implies, you can only buy them through stock exchanges like SGX. Okay, you can only buy them through stock exchanges like SGX. Whereas if let's say if they are not exchange traded funds, they're just unit trusts, you cannot get them from exchange. You have to buy them through the banks. So what I mean by you have to buy to exchange, so it's just that you have to buy like any other stocks. So if you want to buy ETF, you have to go to a Tiger platform. Okay, and you can buy the ETF there. So whereas if let's say the unit trust is not listed, then you have to go to the bank and buy. So there is one main difference between ETFs and the funds you find the banker. The second main difference is this: most of the ETFs, they actually track the performance of an index. Okay, so they track the performance index. So what's the index? So of course, the what do you call that? The simplest example is STI, STI ETF. Okay, so of course, what do they track? They track the Singapore market. Basically, they look at the 30 stocks, 30 representative stocks of Singapore. So there are a lot of indices around. Okay, like for example, US, we look at Dow Jones Index, S&P 500. Japan, we look at Nikkei. Hong Kong, we look at Hang Seng, so on and so forth. So besides all this country index, you also have a lot of sector index. Okay, and obviously you have China index, so on and so forth. Now, what is the significance of this? That means you don't have a person, you don't have a fund manager to make investment decision. So I think I have a chart here. Yes, wait, let me just see. Okay, so I have example here. So let's say, for example, you invest in this thing called the STI ETF. Okay, so basically you will just buy into the 30 STI component shares. That's it, full stop. You are not going to buy just 10 of them, 15 of them, or 35. No, it's just that 30 all the time. So you don't have an investment manager to actually make investment decision. Okay, so they just follow the index. So this is what I mean by just follow index. So obviously, if you don't have someone to actually make an investment decision, that means what? You actually save on the cost. So most of the time, in terms of the management fees, ETF is a lot cheaper than the unit trust that you actually buy from the bank. Okay, so these are the two main difference between ETFs and unit trust. If not, structurally wise is the same. Okay, I think this diagram will show. So basically, they're just a vehicle structured for investors to put their capital together. Okay, like for example, I could actually set up this investment fund company. Okay, then I raise funds from all the investors. So let's say, all of you actually invest my funds, you get a unit of me, and I take the money to actually go and buy underlying instruments. So if you own a unit of me, indirectly, you are owning the underlying stocks. So of course, usually I don't just buy one stock, one bond. Okay, I'll actually buy a basket of instruments. Okay, so this is what ETFs is. Okay, so I actually went through this slide already. Now, why do you use ETF? So under what scenario you use ETF? So of course, number one here is this. If let's say, for example, you have no bandwidth to analyze individual counters. Okay, I actually do see some questions with regards to the Chinese stocks, Chinese stocks listed in China and Hong Kong. So if let's say, for example, you are not able to analyze them, it's actually not easy. Okay, sitting in Singapore, especially as a retail investor, to analyze stocks in Hong Kong, analyze stocks in China, not easy in terms of, you may not get the information and you may not get the nuances. So of course, every market, the news travels so fast. If you're not there, you may not be able to really digest the news as quickly as enough. So in that sense, sometimes it's actually best to leave it to professionals. And of course, ETF is one way you can do so. So in this case, once you buy the ETF, you are not buying individual counters, you are buying a basket. And that was very good for people who have no bandwidth to analyze individual counters. And in this particular case, currently, or at least personally, I am actually bullish on the Chinese economy as a whole, not particularly any counters. So I believe, of course, Chinese story is actually quite straightforward. They have been on zero COVID policy. Now they are actually coming back. There may be a rebound. So is the whole Chinese economy coming back? Not like a particular sector of, like, for example, the banks or the healthcare. No, it's the whole economy. So in fact, this is what I want to invest in, the whole economy, rather than, particular sector. So that's why, again, ETF is actually very useful. Okay, so why am I actually spending at left? Because end of the day, there is 101 investment instruments for you to choose from. No end. You have ETF, you have stocks, bonds, REITs, treasury bills. I think some people were asking me about treasury bills, FD, insurance, so on and so forth. So really, to decide which one is best for you, you have to ask yourself, what is your objective? Okay, don't ask whether they can make money or not. All instruments will make money, or either that all instruments will lose money for you. Okay, so it's really about exactly what you want to achieve. So ETF is actually very good if, let's say, you really have no time to analyze individual counters and you actually want to invest as a whole. Then this instrument can be very useful to you. Okay, so let us look at some of the China ETFs that's listed on the Singapore Exchange, SGX. So what I am doing here, of course, I cannot make recommendations. Okay, I'm here purely on educational purpose. I can't make recommendations. So please remember my disclaimer. So please don't, whatever I say, then you just can buy, then make money happy, lose money, scold me. No. So, but of course, what you should bring back today is what are some of the selection criteria you can depend on to help yourself make a better judgment and make a better choice. So this is what you should focus on. What are things to look at? Okay, there is actually this thing called the SGX ETF selector. So probably what I'll do later is to go and do a live demo on the website. So bear me for a while. Okay, so if you just do a SGX ETF selector, you can actually look at, all the different ETFs here. So maybe I should do it right now. Okay, so what you can do here is this. You can go to sgx.com. You look at securities, ETF screener. And yes, so you can actually screen out all the list of the stocks. So like, for example, if you are interested in China, you can go geography, China, okay, submit. Okay, so you can have all the different ETF. So down here, you have some of the main items to look at, like for example, the dividend yield. Okay, by the way, ETF, they actually give dividends as well, the expense ratio, so on and so forth. So in fact, today we have 17 ETFs related to China that is actually listed in the Singapore Exchange. Okay. So SGX ETF selector. Now, the one of the main thing when we actually select ETF is actually look at this thing called the AUM. AUM, okay? AUM stands for asset under management. So generally speaking, we'll prefer ETF with the larger AUM. Okay, larger funds. Okay, so that there is actually more efficiency. Okay, so basically that of course, even though there's no person managing, but you definitely still need to employ people, so and so forth. So there is certain costs in running the fund. So if the fund is large enough, then the cost is not so significant. But then if let's say the fund size is actually too small, then of course, all these fees, all these expense can be quite high. So generally speaking, we prefer large AUM. And of course, if let's say you really need a number, as per what I written here, AUM should at least be about 50 million. 50 million, and I'm actually talking about the global AUM. Global AUM should at least be 50 million. Okay, so this is what do you call it? This is one of the main criteria I actually look at when selecting ETF. How do I actually come to this page? You can actually see this link here. If you like, you can actually take a photo of this link. So of course, this is again can be found in the SGX website. Okay, so they actually have this document, and this is where they will actually tell you what is the AUM. AUM like China, what is the AUM of the various ETF. So again, generally speaking, I just go for the biggest one. And if there's any particular ones that I like, okay, I will make sure it's at least 50 million. Also for global AUM. Okay, let me just go back to my slides. Okay, so the first thing when I look for ETF is the AUM. Okay, I want to go bigger, better. Okay, the next is always good to at least understand what is the investment theme of the AUM. Okay, what is the investment theme? Or basically, you look at what are the top 10 instruments or top 10 stocks they are actually holding on. So of course, if you actually read their documents, you can actually find it there. So if you go to SGX ETF selector, you actually read the documents, you can actually find what are some of the top 10 holdings. So at least have a sense of what the main stocks you'll be looking at. So let's say, for example, I actually look at this thing called the X Tracker, MSCI China ETF. Okay, so I'll be basically indirectly owning things like Tencent, Alibaba, Meituan. So these are the companies I will actually be having. Okay, then of course you have to ask yourself, hey, is this the kind of company you like to hold, you like to invest in? Okay, so just more example, like let's say, for example, this is also quite a popular ETF. This is a Hang Seng Tech, which obviously, as the name implies, focus more on the tech companies. So you have the main one is like Xiaomi, Kuaishou, Meituan, Alibaba. Okay, it's quite similar to the first. But for the first one, you have also non-banks, non-tech companies, like for example, the banks. Whereas for this, is very focused on tech companies. Okay, very focused on tech companies. So again, when you choose ETF, the first thing is AUM. Okay, next is what is the investment team. So do you really want to sway some more to tech, or if you want something more generic? Okay, so if you want something more generic, of course, you can actually choose this one, whereby they actually focus more on various type of stocks. Whereas for this particular one, line OCBC, okay, they are actually focusing more of tech ETFs. Okay, so like OCBC also have another one which is also quite popular called the China Leader ETF. Again, you can see is actually quite similar to the first one. Then in this case, if let's say they're quite similar, then I'll just go by AUM. Which one is the larger AUM? So this is how I actually select ETF, which is basically just these two main ideas. So of course, number one, I must believe that the China story lah. I believe in China story. I want to participate in China. So then after that, okay, I've decided already I want to invest in a Chinese ETF. Then how do I select among them? So number one, I look at AUM. Okay. Number two is I look at, what are some of the main counters I'm looking at, and I see whether, hey, is there any particular group that I prefer better? Now, if let's say, for example, you want to dive a little bit deeper, you want to do a little bit more analysis, what you can actually do is look at the expense ratio. This is the one I'm talking about just now. Okay, of course, if you want to run a fund, there are some of the fees involved. You want to make sure that the expense ratio is not too high. Generally speaking, for ETF, it's actually quite low. They should be less than 1%. Okay, less than 1%. Okay. So, of course, if you want, you can use this as a comparison. So, let's say you have two ETF, both also like, both are okay, then you really don't know which one better. Then maybe you can use the expense ratio to help you decide among them. Okay, as mentioned just now, ETF, you can buy and sell like any other stocks. You can just go to your Tiger platform. Okay, then in fact, yes, they have actually one segment on ETF. Well, you can just go there, click buy, that's it, just like any other stocks. So you don't really need to open a separate account or go to somewhere else, open account. No, your Tiger platform can already allows you to go and buy ETF. Okay, so this is one way for you to participate in the China rebound story, growth story ETFs. Very straightforward. Okay, so if you so decided, okay, yes, I want to invest in China, then it's really about selecting which ETF. Also, you go by AUM, go by the what are top 10 holdings. Then very likely you will see one or two that pops up very nicely. Okay, good. I see a lot of questions. Thank you so much. Thanks for coming in. Like I said, I'll try to answer them at the end of the session. Yes, I should have enough time for that. Okay, so the next thing, if you want to get China exposure, is of course to REITs. So Singapore market is very strong in REITs. And we have quite a number of REITs with Chinese exposure as per what this slide is showing. So basically, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Wow. So SGX only have about, if I'm not wrong, the last count is 39 REITs. And, 10 of them actually have Chinese property in China. And we are talking about 1, 2, 3, 4. 1, 2, 3, 4. 4 of them actually is 100% property in China. Okay, so this is definitely a very good way for you to gain exposure to the Chinese market. So of course, we know that during the COVID periods, they have lockdowns, they have work from home, their offices, their hospitality, their retail are being hit badly. And when now things are opening up, things are coming back, okay, I'm quite sure all this will be doing well, okay. Like in Singapore now, we have this thing called a revenge travel. For information, if you actually book air ticket like just a few days before, it's going to be very expensive. So I do believe, this rebound will be fast and furious. Okay, so I just want to have one REIT as a case study. Again, I am not recommending these REITs. I'm just using this as a case study to illustrate the criteria I use to select the REIT for investment. Okay, so a lot of times it's not about, which is, just by looking alone, that this is good or this is bad. So I always like to joke. So buying REITs is like choosing boyfriend or girlfriend. If you want to look for the perfect boyfriend or girlfriend, then very likely you're not married. Okay, just joking, but you don't mind. Okay, so basically a lot of times, like for example, if I want to buy a Chinese REIT, I would probably look at least compare with another three. At least another three to five. Then, of course, out of the five, then I see which one stands out. So this is what I do. And what are the criteria for me to compare? Yes, okay, this is what I'm actually showing right now. So please, your main takeaway from this segment is what are the criteria to look at rather than say, oh, okay, the trainer said this must be good. No, definitely not. Okay, now the criteria can be classified. The criteria from choose REIT can be classified into three segments: business analysis, financial statement analysis, and pricing analysis. So of course, these are three segments. Then let's say I choose three REITs. I actually look at them based on all these criteria and see which one stand out. Now, in terms of business analysis, it's just basically looking at what kind of properties they have. Then ask yourself, is this the kind of property you want to own? Okay, so accept it. No need to be shy about it. If you buy REITs, you're buying property. Like for example, people tell me what I do. Ask me what I do. I'll say I am actually a global property investor, and I'm not shy about it. I'm a global property investor. So if you want to be a global property investor, also easy. Just go and buy REITs. Once you have 10 REITs in your basket, you're also a global property investor. Okay, so now, the first thing first is at least look at the picture of the properties. Then ask yourself, hey, do you think such properties 5 years later, 10 years later, can they continue to be rented out? So that is business analysis. Now, when I will actually look at the sign. By the way, where do you actually get this information? I'll just go through very quickly. I think I have some time for that. If you were to just look at the website, okay, if you were to just look at the website under investor relations, financial information, financial results. Okay, so they will actually have presentation slides like every time they release a result. So this is where I get the information. So I strongly urge you, go and read at least once the presentation slides, then you will know the REITs very well. So again, you just go investor relations, financial information, financial results, and look for presentation slides. So this is where I gathered all the information. Now, usually at the top, they will just give an overview. Now, what is most interesting to me here is actually this thing called the occupancy. Occupancy. And to pass my test, I need it to be at least 90%. 90%, which obviously this company will pass the test, as you can see here, more than 90%. So this is what I want. So end of the day, to make sure it's actually rented out. And yes, this company, 90%, no problem. It's also good to take note of the different, how much assets they have and where the location, okay? Now, please take note now for Chinese property. For Chinese property, there is one downside, relatively speaking, okay, which is their land tenure is shorter. Okay, what is land tenure? So let's say, for example, if you buy a BTO HDB, your land tenure is 99 years. That means 99 years later, okay, you have to return the land back to government. So that's when we are land tenure. Now, for Chinese property, one of the downsides, land tenure is shorter. So generally speaking, only 40 years, 40 years. So like for example, let me see. Okay, 2042. So there is this particular property. 2042, the land will expire. 2042 is just like another 20 years away. Only 20 years. And the land have to give back to government, and obviously the building on top also have to give back. And then, of course, you don't derive any rental income anymore. So please take note, this is one of the downside for Chinese REITs land tenure, but doesn't mean there's no good. Okay. Usually it's actually being compensated with what? With higher dividend. Like, for example, today, if you actually buy REITs with Chinese property, you'll realize that the dividend is higher. Okay, why is that so? Because of the shorter land tenure. So life is quite fair. If you actually go and buy like properties with longer land tenure, you realize the dividend may not be as good. Okay, so life is fair. Okay, now in doing business analysis, I will want to look at the dividend profile. I want to see whether does it grow over the years. Okay, like in this case, this is not exactly the picture I am looking for. Okay, so again, end of the day, like I said, I'm not here recommending. So these are the steps you do. So you may try to compare to see whether is there a particular REIT with a nicer picture. Okay, so I sort of purposely keep this example so that you know, it's not like, wow, everything perfect. So this is what happened most of the time. You cannot find a perfect REIT. Okay, like in this case, you can see that the dividend actually drops for obvious reasons, because this is retail is affected greatly by COVID, especially in China. But the thing is, it may be coming back. It may be coming back. So of course, if you believe that eventually it could come back to pre-COVID, then there's actually a lot of room to grow if you actually see it that way. But just by the numbers flatly, it's not a very nice picture to look at. Okay. Okay, next is the income profile. So this is, we just want to compare with the latest 6 months, latest half-yearly numbers. Okay, latest half-year numbers. We want to see, is there improvement? So again, we haven't really seen them really come back for obvious reasons, because in fact, the zero COVID policy only being banished in 2023 this year. Okay, so up to last year is still bad, which is expected. So even though the numbers actually don't look very good, I think it's understandable. So again, what you may want to do is you compare with other REITs to actually see, is there any other REITs with better numbers to look at. Okay. Now, let's look at the business outlook. So by the way, all this information, I just got it from the presentation slides, which I shared with you all just now. If you actually read the outlook, is actually very optimistic. Let me just read you some of the paragraph here. Retail, most Chinese provinces aim for economic growth above 5%. Target to focus on boosting consumption, well positioned to ride recovery of domestic consumption with completed AEI across multiple assets. So basically, it's a very optimistic, bullish environment right now in China, especially if you look at the outlook. Poised to benefit from structural upgrading of economy towards technology development. A lot of positive things happening. Growth fueled by government policies to boost domestic consumption, reduce logistic costs, creating economic opportunities for consumer-focused SME. So this is life. You don't have everything good. So China, just now, we actually saw some negative stuff. Like, for example, the dividend hasn't been very well. The income has dropped. Okay, but you are looking at a very optimistic future. So whereas if you actually compare with some of the Singapore REITs, yes, maybe the past few years, the dividend has been doing well. But if actually the outlook is a little bit more pessimistic, so you can go and compare, you can have a sense. So I'm not saying which one is better. Like I said, to which is own. Okay, so anyway, this is definitely one bright spot and one of the reasons why we actually want to focus on the Chinese REITs. Okay, so we have done with the business part. So the next is to see whether is it financial healthy or not. So to do that, I just look at two ratios. One is called the gearing ratio. The other one is called the interest coverage ratio. So for gearing, I need it to be less than 40%, and this is a pass. Okay, 39.9 less than 40 is a pass. Okay, don't tell me 39.6 because no. Okay, as long as less than 40 is a pass. So this is a pass. Interest coverage ratio, I need it to be more than 3 times. So again, this is a pass. So these are the two ratios I actually look at to sort of have a sense of whether are they financially healthy or not. So this read, no problem. The other thing I look at is the distribution of the maturity profile. How are they being distributed? So this is what I like, quite evenly distributed. I will have concern whereby, let's say, one particular year, okay, then they have very high maturity debt on that particular year. So this is quite good. And you may actually want to know that actually, okay, it's actually not stated here. Wait, hold on. Okay, sorry, it's actually should be okay, yeah, here. This is what I'm looking for. So in fact, like for example, a lot of people say because of interest rates, the REITs will be badly affected. Okay, so they are definitely affected. I'm not gonna lie about it, but it's not like end of the world. Okay, because you can see here, in fact, quite a number of their loans is actually on fixed rate. Okay, so now I keep hearing that don't buy REITs. REITs gonna die. The interest rate is gonna kill them. I don't deny there's an impact, but it's definitely not end of the world. And by the way, you know, a lot of times because of this, they are also going to increase their rent. Okay, so given that China is coming back with vengeance, I think it's quite easy for them to increase the rent as well. Okay, the last is pricing analysis to see whether, hey, at current price, it's cheap or expensive. So what I do here is I actually find this thing called the fair yield, fair dividend yield. So what I mean by fair dividend yield, I actually take the average dividend yield over the past 5 years. Average dividend yield over the past 5 years. So this is what I've done. I actually take the daily closing price for that particular year, as you can see here. I actually take the dividend given for that particular year and actually find the average dividend yield, and I actually eliminate 202 because it's an outlier. You can see 6.9, so selling 4.9, I don't think is good. So basically, the fair yield for me for this particular REIT is 6.7%. What I understand with this number here is this, that means for an investor, when they actually buy these REITs, they should expect 6.7%, or at least past 5 years, that's what I have been doing so. And I'll just compare with the current yield. What is the current yield? I take the past 12 months dividend divide by the current price. So work out to be about 6.6. So it's not exactly cheap. Okay, yield, of course, run higher, better. It's not exactly cheap, but the price is actually quite fair. Okay. So yes, so wow, I'm actually covering a lot of content now. Hopefully you are still there with me. Last 15 minutes, bear with me for a while. So again, today I'm actually talking about, you know, China, how you can participate in China. So I talked about ETFs. So that is one way. If you, let's say you really, I don't know lah. So many things to buy, don't know what to buy. Or either they believe in the whole China economy coming back, not particular sector, just go ETF. That's it. Okay, second way is if let's say, for example, you believe that, hey, the retail is going to spring back. Or either that you believe that the REITs are underpriced right now, or either that, hey, you're more dividend focused, then of course the Chinese REITs can be actually quite interesting. So the third way to participate in the China story is, of course, SG stocks with business in China. SG stocks with business in China. So we have actually quite a few. I'm actually breaking down into two categories. Number one is looking at the SG companies with business in China. So these are your household name, you know, Raffles Medical Group, CapitaLand, iFast, they have business in China. So of course, if China going to do well, yes, their stock price is also going to perform as well. So yes, we have quite a number of them. And we can also look at some of the Chinese companies that's listed on SGX. Again, we have quite a number of them. Also, the more prominent ones, Yangzijiang, I'm quite sure you all know about this company. Yanlord, Everbright, Sunshine. Yeah? So basically, we have quite a number of Chinese companies listed in the Singapore Exchange. Obviously, this is also one of the ways to participate in the China rebound story. So again, I just want to do one case study. Yes, another 13 minutes. Bear with me for a while. I think I try to finish in 10, then I'll leave some time for Q&A. Yes, disclaimer. I know I'm repeating. No choice. No choice. I need to keep repeating disclaimer. I am not doing stock recommendation. I just want to use this case study to illustrate the criteria I use for stock investment. And again, same thing. It's very hard to say whether Raffles Media Group can invest or invest by its own. Okay, it's good to actually compare. So generally speaking, for me to buy one stock, I will compare with 5 other stocks. So if I really want to invest, I will compare 5 other stocks, and what are things I compare. Okay, this is what you should be focused on. So same thing. What are the criteria? The criteria is classified under the same 3 things. Business analysis, financial statement analysis, pricing analysis. Same 3. Business, financial, pricing. Same 3 thing. So business, Raffles Medical, what do? Quite simple, right? Healthcare providers, they have hospitals, they have clinics. By the way, they're also into insurance. And what really caught my attention, okay, especially for this team here, is that they're actually quite big in China. So this is from their chairman's statement. If you take a closer look, now they have three hospitals in China. Raffles Hospital Shanghai, Raffles Hospital Beijing, and Raffles Hospital Chongqing. They now have 3 hospitals in China. Wow. Okay, so it's not small. By the way, okay, I don't have the number. Yes, the last time I checked, okay, these hospitals, each of them is actually bigger than the one that we have in Singapore in terms of the number of beds. Okay, in terms of beds, they're actually bigger. So can you imagine, it's actually quite a huge operations in China. And unfortunately, they didn't really get in at a very perfect time. As you can see, Shanghai is 2021, still COVID. Chongqing, if I'm not wrong, is when they just started, then COVID happens. So in that sense, the growth is sort of being stagnant. Okay, so by the way, this is private healthcare. So some of you all may think that, wow, the hospital just right, then after that COVID, then there are more business. Okay, no, this is private healthcare. So you can think of it this way, is a bit like medical tourism. They only serve the richer ones. So COVID, in that sense, is not going to help them in China. Okay, so healthcare, there's different tier. So this is a little bit like very atas healthcare. Okay, so of course, now with the COVID over, I think now is good time for them to really what do you call that? Really capture the market, and of course, really expand their businesses. Okay, so that's why I'm actually quite excited for this company. So of course, I can be wrong. Okay, there are people saying that, hey, want to be successful in China healthcare, not so simple. Yes, but this is the nature of growth stocks, high risk, high return. So that's for business analysis. For financial statement, okay, for stocks, I look at 6 tests, 6 indicators. Number 1, I look at the income profile. Okay, the income to me must be positive. And if it's growing, like what I'm seeing here, of course, this is something I like very much. That's 1. Number 2, I look at the cash, operating cash flow. Again, I need that to be positive, okay, which is happening. Number 3, I actually look at the debt equity ratio. Okay, I need this to be less than 2. Less than 2. 4, I look at the current ratio. current ratio, I need it to be less than, current ratio, I need it to be more than 1. More than 1. 5, interest cover, I need it to be more than 3. And 6, profit margin, I need it to be more than 5%. So basically, this company will pass the test. Okay, again, I just want to show you very quickly where I get all this information. You can just go to sgx.com. Okay, securities, stock screener. And you just key in the company looking for, Raffles Medical. Okay, so under financials, you click on financials, you can get current ratio down here, interest cover, profit margin. Okay, if you click on financial statements, you look at the income statement. This is where you get the net income after tax. You look at the cash flow statement, cash flow from operating, and you look at the debt equity ratio here. Okay, debt equity ratio. So this is how to pass my financial tests. 6 of them all have to pass. And yes, pricing analysis, we will look at the PE, PB, and dividend yield. So again, down here, we have to do valuation, do comparison to see whether chip expensive. What is the PE, price to book, and dividend yield. So just to give you some quick overview, like PE less than 20, if you ask me, is actually quite attractive. Okay, and for dividend for company like healthcare, in fact, this is the main thing I look at, and this is actually quite attractive. So of course, if you want, you can actually compare with the rest to actually find more. Okay, great. Good timing. I have some time to answer a question. So this is my conclusion for the day. China is probably one of the main bright spot for investment in 2023. So through SGX, we can participate in China's rebound via ETF, REITs, and companies with business in China. So I've actually went through them. And of course, we can do business, financial statement, and pricing analysis to select the right stock for investment. Okay, now before I answer your questions, I have a good news for you. Okay, so again, thank you so much for SGX and of course Tiger Brokers. They have decided to actually sponsor some of my online courses for some of the lucky audience here tonight. Okay, so there is so they are going to give out. Okay, thank you, Tiger Brokers. They're actually going to give away 8 of my online courses for free. If you buy them, it's $98. They're going to give 8 for free and you pay 0. Okay, of my online courses for 8 of the lucky winners. So all you have to do is to answer the questions later. So I'm actually going to flash 2 questions later. The first 4 person that get the correct answer per question. So one question, we're going to give away 4 of these prizes. Okay, so of course, if it's repeated, then we'll see how the first 4 person that get the correct answer will actually win the prizes. So what is actually this course about? So like, for example, just now I did mention, hey, all the different criteria, business analysis, financial statement analysis, pricing analysis. If you actually need more information about, hey, what are all this analysis, how do I actually learn more? Why all this analysis and so on and so forth? Okay, so this is the online course for you to go to. Okay, not only that, okay, this course will also talk about the portfolio management part. How do you basically create a portfolio? Okay, so by the way, I actually run this course in SGX live, face-to-face, and this is the exact same content as the one I'm actually used to run my live course, and the live course actually costs about $600-700. Okay, now without further ado, let me just ask the question. So get ready. The first 4% that get the correct answer first win the prize. So the first question, which of the following is not a criteria for ETF selection? It's not a criteria for ETF selection. Is it A, AUM, B, expense ratio, C, number of stocks invested, or D, investment team? Which one is not a criteria for ETF selection? So can I get some answer, please? Okay, great. We have the 4 answers already. Very fast fingers. Congratulations. Okay, so sorry for those who actually come in later. Okay, you may actually want to answer the question later. So, Clary, hopefully you get the answers already. Thank you so much. Okay, congrats to the winner. So I think yes, value traders, J Dollar, all this. Congratulations, fast fingers. Okay, still got one more chance. Here we go. To pass the current ratio test, we need the current ratio to be, is it A, lesser than 1, B, greater than 1, C, equal to 1, or just D, the higher the better? Which is the answer to pass the current ratio test? A, lesser than 1, B, greater than 1. Okay, great. Thank you so much. I think we have the answer. The answer is actually B, Answer is actually B, Thank you so much. Okay, great. I believe we are winners. So of course, you will hear from Tiger Brokers very soon as to how do you actually go and get the prize. Now, for those who actually unfortunately didn't win, okay, if you are still keen to attend the online course, again, good news, Tiger Brokers have decided to actually subsidize the course. And because of their sponsorship, instead of $98, you can actually get the course at $49.98. It's almost a 50% off, $49.98. So for those who are interested, you can just scan the QR code, or either that, take a screenshot of this coupon code. Okay, and you can actually attend the course at a very special price, $49. So please take note, this link is only available for 4 days, only 4 days to this price, and there's only 20. Okay, only 20 slots available. Okay, so of course, if you win the prize already, then no need, you actually get it for free. So for those who actually didn't get to win the prize and you want to attend the course, okay, so do scan the QR code right now. Okay, so before I go, I just want to try to answer some of the questions that you all have posted. Really, thank you so much for posting the questions. I do as much as I can, hopefully to answer the questions. So give me 1 minute. It's a little bit small. Okay. Okay, Chinese concept stocks can continue to rise. Okay, so sorry. So this is, of course, I am actually more focused on SGX stocks. And of course, today's webinar is actually mostly on SGX counters. So I can't really comment on the Chinese stocks. So yeah, probably it's not the platform. It's not the right platform for me to comment further. Of course, what I can say here is this lah. In general, I think I'm actually quite bullish on Chinese stocks. So yes, you may actually want to look at some of the ETFs, okay, whereby they have exposure in some of the Chinese stocks, Chinese banks, and so forth. Okay, is it good time to buy? Yes, again, sorry, US Treasuries, it's not really the context of today. That's of the seminar. Okay, this is really what I want to know. Okay, thank you so much. Let's see. Is there any other questions? Okay, saw news about trouble with banks in China a few days before. Will this have any effect on the stocks while market reopens? Okay, okay, I'm not too sure exactly what are you referring to. Okay, again, like I said, this is another good benefits about investing in ETFs. Okay, so you are diversified. You are not subjected to any what you call alpha risk. That means only to the particular industry. So with ETF, your risk is diversified. So even if let's say, these ETF banks, but it's one of the many stock in the portfolio, the impact is a lot lesser. Okay. ETF is cheaper. Yes, compared to unit trust, ETF is actually cheaper. Okay. Okay, if for unit trust, how much is cheaper? Okay, so basically for unit trust, most of the time that is actually this fund manager. There's actually this person that is making investment decision. Unlike ETF, is actually index based, so you don't really have that decision maker. So it's actually, in terms of expense ratio, is actually significantly lower. Or you have to compare. So of course, different ETF, different unit trust, but you can be talking about, like, for example, average about 1% at least difference in terms of the expense ratio. Yes, the land tenure is 40 years, no choice. Okay, so of course, if let's say, for example, you're uncomfortable with 40 years, then probably you may want to focus on other REITs, but it is what it is. Yeah. Okay, dividend keep dropping. For the Chinese REITs, of course, for obvious reasons, they have the lockdown, they have zero COVID. Yep. So the dividend for the past few years hasn't been very good. So what we are banging on here is this: now that the economy is open, okay, can the dividends come back as a vengeance while the price today is still low? So that is the thing that I am, you can actually consider. The investment angle you can consider. Okay, great information. Thank you so much. I love your disclaimer. Okay, sorry, no choice, part of my job. Okay, good. I think I have answered all the questions. Have I answered all the questions? Okay, so for the winners, yes, you'll be contacted by Tiger Brokers very soon. They will reach out to you individually. Also, I think from here we can actually track who are the first 4% that actually get the who actually win. So anyway, you will hear from Tiger Brokers very soon. Okay, how about Siswa REIT? Is it good? So again, to me, I would just compare. On its own, it's very hard to say good or no good. It's just like, for example, asking you, a beef nice or not, or chicken nice or not. So it's easier to say, I would prefer beef to chicken, or I prefer fish to chicken, or something like that. So if you ask me on your own, so Siswa REITs definitely have its positive points and negative points. So only after comparing, then you ask yourself, is it a good REIT for you to invest? So of course, how do you compare? I've shared in the presentation just now. And of course, if you want more information on the criteria, this online course is going to help you with that. How about ETF investing in Chinese? Sorry, that one I'm not too sure. Or where can I listen to more of your webinar? Oh, of course, you can. You can. Yeah, you can keep a lookout for me. I do talks at SGX quite often. Or either that, of course, you can stick to Tiger Brokers. Sometime I actually do talks for them as well. Okay, so with that, thank you so much, everyone. So yes, that is all I have for y'all for today. So I look forward to see y'all again very soon. Okay, so once again, thank you for attention. I see you around. Okay, bye bye, everybody. Bye bye.